How do mortgage lenders calculate living expenses? What we're talking about today in the East Central Business Show. I'm John Naylor, joined by a resident expert mortgage broker, Laura Sillano.
Good morning.
What a treasure you are.
Thank you.
Award winner and all, shorter hair.
Yeah. You like it?
Yeah. Now, we doing advice today?
No.
Okay. Got that out of the way. There's a disclaimer at the end of it.
Yeah.
Fantastic.
Perfect. Well done. Yeah.
Thank goodness. Let's get on with it. And we're having so much fun today. Let's move on to a lot of topic, but then not so much. It's still serious business because we're trying to loan money for investment properties or mortgages and that sort of thing. Calculating living expenses. This comes something that's very dear to your heart, Laura.
I know.
Why?
I know we've spoken about it a number of times. I know that. The reason we're speaking about it again is because it's really important. Okay, this is a big deal.
Like, we're saying it to the camera. Let's say it together. It's really important.
Okay, really important because it is often the most difficult part of an application to assess and the part of the application that is under the most scrutiny at the moment.
Right.
It's really important that, that's what I'm talking about again. Yeah.
Okay, but living expenses. So what do you mean by that? Let's break it down for people.
Okay, so living expenses are all of your personal expenses for where you live. So that includes things like utilities, for all of your connections. So things like phone, electricity, Netflix, internet, all of that kind of stuff. All of your food and groceries, all of the maintenance on the house, all of your investment property expenses.
So the expectations, people have got to be intimate with how much it costs to live their life.
Yeah.
And be able to showcase that.
Yes. And work off real data and also be consistent with what your budget is. Because what's happening at the moment in Lenderland, I like that, Lenderland.
Is there fairies in Lenderland? I don't...
Depending on the lender and their level of... what are you talking about?
I was asking whether there's fairies in Lenderland.
Could be. Anyway, you are so random. What was I talking about? I was talking what they do.
What the lenders are doing, yeah.
Yeah, what they actually doing to verify living expenses. So more and more, they are looking for your statements, your bank statements, which is your actual data to calculate the living expenses for you. Right, so I know of one instance with a lender where they've gone through 3 months bank transactions line by line on every single item and added them all up and said your living expenses are not X, they're Y, therefore we're not going to give you the loan.
Oh, so they compared the apples to oranges and came up with a different result.
Yeah, and just went, nah.
Computer says no.
Not going to give you the loan.
Wow.
So that's a very different approach than what has historically been done, where clients really just declared what their living expenses were with an estimation between each category.
So you've got to be really super tidy around this stuff.
Yes.
And it's not just, because I remember in my short foray into home, as a mortgage broker years ago where, you just use some calculations and X, Y, Z, there you go, you're a family of 2 kids in that suburb, so...
Off you go. Yeah.
No longer?
No.
Okay.
Okay, so you just... I cannot
so you're
stress
still allowed,
this enough.
you're still allowed to live a life, it's just you've got to be accountable to this process, yeah? Yeah.
So it's about, again, prioritising what your values are. So, if you want to get a home or an investment property and you need your living expenses to be at $4,000 a month to do that, and you're a family of 2 adults, 2 kids or whatever, with childcare as well, because that can be a big expense, and you need them to be at $4,000 a month to complete that transaction, and you're spending $5,500, you just won't be able to buy the house. And that's the future of where the living expense stuff is going. So all I would say is get in the habit of dealing with that appropriately now.
Okay. Yeah. So you make sure you got your ducks lined up and everything will go smoothly. Yeah?
Yes.
Fabulous. Now, at what point in this process should people talk to a mortgage broker?
What do you mean when they're?
Yeah,
when they're
well,
actually-
the fact that they're watching this video and,
Okay.
and considering using a mortgage broker.
If you're looking at buying, if you're looking at refinancing your loan, if you're looking at purchasing an investment property, your first investment property, anything that's going to trigger a transaction to go to a lender, you probably need to speak with your broker before you, at least 3 months before you actually want to do that transaction.
So as a minimum, this living expenses thing, they will look at 3 months
Yep.
transaction type thing. So okay, so if you're a bit untidy now,
You really need to clean it up.
and give yourself
Yeah.
3 months.
Yeah.
Is your advice around this?
Yeah.
Not advice,
My suggestion.
a suggestion. Okay, fabulous.
It's like red lights in Italy. It's just a suggestion.
Okay, just
Yeah.
an advisory. Yeah, it's just guidelines.
guidelines.
Okay, anyway, well, look, obviously a great thing and a great idea, obviously, at this point is to get in touch with a great mortgage broker like Laura Sillano from Pod Financial. How do they do it, Laura?
Sure. You can call me on 0422 320 497, or you can also email through to the office, home@podfinancial.com.au.
Okay, there you go. So, Laura, on about living expenses again.
Banging on about
We're
it,
banging
yeah,
on.
sorry.
We've got a few videos like this. But anyway, we're going to do it again for sure at some point in the future. I know that for sure. Anyway, we'll do that in another episode of the eCentral Business Show.